So in these hallowed halls, I'm afraid I'm going to be a bit critical. And I was asked to sort of raise some of the the typical problem areas and the difficulties that my clients, and I'm an accountant, but I work entirely with non-profit organizations, and I've been doing that for over 30 years. And I've been a field director in the field, and I've been a finance director of a charity, so I've seen it from many perspectives and many sides. So I asked some of my clients, is there too much bureaucracy from the EU? And these were a selection of quotes I had. Almost feel it's not worth bidding for this. A paper chase. Do they appreciate the operational realities? So let's unpick this and see what this really might mean. Why are people thinking this? And in fact, why has the EU recognized this with its whole process of simplification and seeing the need for simplification? So I'm going to look at it from a perspective post-award. Once you've got the work or you're about to get the work and you've actually gone through the procurement process, what are the sort of issues and challenges and how could they be perhaps simplified as part of this whole simplification process? I'm going to look at it from the point of view of compliance, record keeping, audit and clawback. And I've just been looking at this, this document, and actually this document talks about all those areas. Record keeping, audit, and then of course because of audit as a result of a clawback. But just let's unpick this and see what it means. Because one of the big challenges that we have is how do we actually get the right balance between accountability and actually delivering what the organizations want to deliver and not being too diverted, not being too distracted from all the other bureaucratic rules. This might sound like heresy coming from an auditor, but actually there's much more to it than chasing pieces of paper. So, what is reasonable evidence? Now, the rules talk about having evidence, and if you look at the accounting guidelines, and you'll have to keep documentation of spend and things of that kind, unless you're working on the sort of straightforward unit cost basis, which is a new method and a new way of doing it. But otherwise, if you're going at reimbursed costs, you have to keep evidence. Now, again, the rules are quite interesting as to how they're interpreted and how you might be able to challenge them. So I've had a case, well, not one, but several cases, where you might have thought that having an invoice is pretty good evidence. So I had a client who'd been taking people for a training course from one country in Africa to another country in Africa, and they had the travel agent's invoice for the costs, and particularly it was for the speaker and people who were delivering the program. But when the EU auditors came in, they said, no, that's not good enough. We're not happy with the invoice, because of course you can always book a flight and you can always cancel it. So you can get an invoice and you can cancel it. And that's not good enough. And what we really want to see is the boarding pass. So they insisted that they have to see the boarding pass. But in fact, my client, people hadn't actually thought of keeping the boarding pass. So they were going to revoke all that expenditure, saying this is an ineligible cost because we can't be sure you got there. And I was there at the time the audit was going on, and I said, look, I'm an external auditor, and I look at things in a slightly different way. And she said, well, what will you do? And I said, well, how do you know they've actually gone? I said, well, actually, here's the course program, here's the course assessment, which says that the speaker was there. Here's a photograph of him at the course. How do you think he got there? He didn't go by camel caravan, he flew. So would you not accept that? And it took quite a lot of time, and they had to get back in touch with people in Brussels before they decided from Nairobi whether they could actually accept that sort of thinking. Okay, so what is reasonable evidence? So hopefully when they're talking about simplifying the need for audit, what we also want simplified is the approach to audit, the sample sizes, etc. Now, as an external auditor, when I'm doing mainstream statutory audits, I never sample 85% of expenditure. Yet, on many of my EU audits, that's what I'm being asked to do. 65%, 85% paper chase. Now, I've been in the field. I've been a field director in India, I've been a field director in Sudan, and I know I can go to the souk in Khartoum, or I can go to the bazaar in New Delhi and get an invoice for anything. So what is this invoice and what is this paper chase that we're really doing? And perhaps they need to be thinking more about, has the work been done, is the deliverable there, and what does it actually cost? Because actually, part of the rules talk about making sure that you've got originals of invoices. And so when my clients have to sort of send me things, they can't send me things by fax. They have to try and courier you bundles. And we keep saying that doesn't make any sense at all. Because actually, I'll print you an invoice, Mr. EU Auditor, and you won't be able to tell me whether it's an original or it's come off my copier or it's whatever else. So let's just understand the realities of some of these things and understand how it might work. So audit. Now, this is just one example. This is just one framework program, the 7th framework program, and it's got certificate issued by external auditors, guidance notes for beneficiaries, that's for my client, and for the auditors. And then it says the objective of these guidance notes, bear in mind these are guidance notes, is to give an overview of the requirements and provisions which are of importance in claiming costs for reimbursement, and hence in the certification of the financial statements and of the methodology. Then they say, these guidance notes do not reflect an official position of the Commission. Only the provisions of the signed grant agreement are binding. But of course, when you look at the grant agreement, they refer you to the guidance notes. And you have to, so therefore, read the guidance notes and understand that you're doing what you're meant to be doing. And is it an interesting read? Well, here's the contents, okay? So you've got all the pages, and it goes on. That first page of contents goes to page 31. The next page of contents goes to page 72, and the last page goes to page 98. And these are the guidance notes for auditors. So when my audit teams go in and they're doing audits, these are the sort of things that they come up against. So we often go back and we tell our clients that right at the outset, when you're negotiating the settlement of the terms of the grants, make sure that you at that time pick up these things. And very often the people who are negotiating it haven't got the skill set. So send it to your finance department and they will be able to challenge and say, well, why are you asking for all these requirements? Now in this document, they're talking about the concept of sort of, sharing information between funders. I've talked about the lead funder concept. So that would help. That would help. But what really makes a lot of sense is finding easier ways to do it. Now, dare I say this, very often your auditors won't be incentivized to support you in this because they like the work, okay? But you can actually say to, in many cases with other people, and we certainly do with all our clients with, for example, DFID, that we say, well, we are actually carrying out a year-end statutory audit, and as long as we put a note in the accounts showing the numbers of your funding, will you permit my client not to have a separate grant audit? And DFID does agree that. So maybe those are the sort of things you could be going forward and talking to people at the EU about. So why does each one have to have an audit? And they talk about one audit. And if you look at this document, even they talk about the post-audit, which can happen up to 10 years after. So let's just understand what all that means. Then in this document, I'm asked to check with my client and ask them whether they've had excessive or reckless expenditure. Okay, this is rather like when you go to get a visa to go to the US. They ask you, are you a terrorist, and have you conducted any terrorist activity and things like that. So you've got excessive or reckless expenditure. The auditor will have to rely on a written representation by the beneficiary as to the absence of reckless or excessive expenditure. So I have to get a written representation from my client saying, we have not made reckless expenditure. Excessive expenditure should be understood as paying significantly more for products, services, or personnel than the prevailing market rates, resulting in an avoidable financial loss charged to the project. Reckless expenditure means failing to exercise care in the selection of products, services, or personnel, resulting in an avoidable financial loss charge to the project. That's all very sensible, but perhaps maybe the emphasis then needs to be more on what should it cost rather than what does that piece of paper say. And when I'm doing audits, certainly on the external audit side, I don't look at what does the piece of paper say. I look at things, well, how much should it cost to ship 100 tons of grain from Port Sudan to Khartoum? What are the other NGOs paying for this, rather than necessarily what does that piece of paper say? So that sort of thinking, where there's more dialogue between the auditor and the person who's being audited, in your case, maybe it's the EU auditor and yourselves, will be much more rewarding, and perhaps that's what we should be trying to move towards. So should we just live with this and say, well, we're getting the funding and let's accept it? Well, I think not. There's an unreasonable cost. It costs a lot to do this work, which actually doesn't add very much value. There's a lot of delay, and actually it's a distraction from all the other things you're doing. And interestingly, that concept comes out in this paper, because in here they talk about diverting you from the work, the true purpose of what you're trying to get your funding for. So what I'd like to do is to make sure that we can push this and make sure that we can stay with this agenda and make sure it's not just paying lip service, but that when we are on the ground, we actually refer them back to the sort of promises and to make sure we can actually see some delivery on some of these things. Because much of what is added in at the moment is not giving any real value add. It's not proving anything, it's not preventing fraud, it's not doing anything of that kind. So it is very often, from my perspective, a waste of time. And as much as I like earning money from my clients, I don't like earning money doing things which is a waste of time for them and for us. And so therefore it's actually worth looking at this in a different way. So some thoughts. We need to look at the clawback rules. And we need to understand how we can get them to simplify these. Because once you've spent the money and you've done everything, and then they come in maybe 2 years, 3 years later and ask you for all the money back, I've seen organizations almost brought down by this, especially smaller NGOs working elsewhere. We need to make sure that there's proportionality in the approach to checks, balances, the sort of things that they're looking for, the sort of discussion on clawback. So does it make sense? I had a case where my client left their office just as the rebels were coming over the hill. Literally, they jumped into their Toyota, they whizzed out of there, and the whole office was burnt. So they didn't think actually that they should have grabbed the EU invoice file with them. You see, that was their problem. So the office was burnt. The whole year's expenditure, the whole year's money was going to be disallowed because there was no supporting evidence. Okay. Now I had to go to Brussels as an external auditor and say every time I've asked my client to provide supporting documentation, they've been able to do it. I've been their auditor for 6 years. I've had no problem with this. In this case, I would rely on the fact that the work has actually been done. So even if the invoices aren't there, we can see the work has been done. You know the work has been done. So why are we chasing these pieces of paper? It was a very long and difficult time for them to agree. But they did agree in the end. Operational realities. Understanding these operational realities is really quite important. Now, some of the things they're talking about here is about storing records, digitalizing the sort of whole e-process, and that's really becoming much more useful, and there may be able to be transmission. But when they talk about that, then you have to get back to this whole thing about what they've asked also about is how do you verify that that was an original? So let's get real about these things. You see this in the wide world, you see this in commerce and industry, you see this all the time. Banks are accepting it, your other counterparties are accepting it, and it's time the EU accepted it also. So this lead funder concept, I think, is quite important, and they talk about it vaguely here. This is where you've got one grant, which is perhaps being funded by a number of people, and each one of them is asking you for different reporting requirements, different statements, different audits, several times over at different times. So one asks you for something now, and then one comes out 2 years later. They won't be able to use the report for the earlier one. And so we're saying, well, let's just think about this and say, well, maybe there's a lead funder. If maybe DFID is funding most of it, then maybe that you could go to DFID to say, have you got the comfort? And that's satisfied. If Danida is funding most of it, then you look to them. Actually understanding this lead funder concept and how it might be used would be quite good. And level playing fields. We always hear about more contracts, less grants. We hear about competing with private sector, etc. But actually there isn't level playing fields when we do this. Because very often when these contracts are awarded to private sector organizations, no one goes to them and says, well, if you haven't spent all the money, you have to return it. They just simply look to see, have you delivered the output? And that's quite important. And I keep going around, even in the UK, saying when I'm negotiating these things, well, hang on, as long as my client has delivered this, why are you asking them to provide this statement, this report, how they've applied and spent every last pound? Because you wouldn't be asking Trust House 40, whoever is competing with us, for that. They would be allowed to make their profit from it. So, I think overall, that was just a quick gallop through some of the problem areas which I see from my perspective as an auditor, and some of the things that you need to be pushing back with when you're negotiating and settling these things that come out of the procurement process.